Ladies and gentlemen, good day and welcome to the Om Infra Ltd Q3 and 9-month FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Mehta. Thank you, and over to you, sir.
Thank you. Good evening, everyone. I, on behalf of Stellar Investor Relations, welcome you all to Om Infra Q3 and 9M FY24 earnings conference call. We shall be sharing key operating and financial highlights for the third quarter and 9 months ended December 31, 2023. We have with us today the senior management team of Om Infra Limited, Mr. Vikas Kothari, Managing Director and CEO, and Mr. Sunil Kumar Jain, Chief Financial Officer. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance, including the investor presentation, have already been uploaded on the website of the stock exchanges. I now invite Mr. Vikas Kothari to share his initial remarks on the company's performance for the quarter and 9 months. Thank you, and over to you, sir.
Thank you, Vishal, and good evening, everyone, and welcome to our company's Q3 9-month FY24 earnings call. Hope you all have been able to go through our investor presentation for Q3 and 9-month FY24. As we have been apprising you on our previous calls, our execution run rate has been improving consistently. In the 9-month ended December 31, 2023, we are happy to report that our revenues of 818 crores, which is the highest ever in the history of our company, and is up by almost 81% year-on-year, and is significant achievement considering our full year FY23 revenues of 799 crores. Profitability for the operating and net margins has also improved during 9 months period. In 9 months FY24, our EBITDA margin counted in about 7.8%, and net profit margin at about 5.3%. In Q3 FY24 too, the execution run rate remained robust across engineering segment and pickup in sales witnessed in real estate segment too, leading to overall revenue growth. Engineering business profitability maintained with EBIT margins at about 11% in Q3 FY24. However, overall EBITDA margins was impacted due to timing mismatch in revenue and expense booking in execution of some of our projects. Our outstanding order book remains healthy at about 2,500 crores, which translates to about 3 times of our FY23 revenues and provides a good revenue visibility for the next 2-3 years. The order book is well diversified with a good mix of hydro and water projects and Jal Jeevan Mission projects and pumped storage project also. Hydro and water projects are typically irrigation, dam, construction of dam, hydromechanical equipments, and are executed over the next 3 to 4 years and give us a good EBITDA margin of about 18%. Revenues for these projects are recorded on a project completion basis. On the other hand, Jal Jeevan Mission projects have 2 major components, which includes pipe procurement and laying and other EPC related works related to civil structures like overhead tanks, pump houses, CWR, RWR, etc., etc. These projects are to be executed over a period of 2 to 3 years with a healthy EBITDA margin of about 12%. However, the nature of these projects requires us to upfront some of the expenses, while book revenues upon completion of the section of the milestones, causing some volatility in our quarterly numbers, including gross margins. Our current outstanding order book of JJM projects is 1,490 crores, out of which 750 crores is from UP and 740 crores is from Rajasthan. Once executed, our track record will be enhanced, and these projects will open the doors for other similar projects with central government as well as with state governments. These two projects, once completed, will give us an incredible pre-qualification for future projects in order to qualify independently for much larger projects over the next 1-2 decades. We recognize substantial potential in India's hydro and water sector, particularly in hydropower and water supply projects and river interlinking projects also, which are coming up now. Leveraging our expertise, we are well positioned to secure a significant market share, especially in hydromechanical equipments, and also generate steady revenue through the next 5 to 10 years through operation and maintenance of the projects that we are undertaking. The growth prospects are further enhanced by the emergence of pump storage projects, river interlinking projects, Jal Jeevan Mission projects, providing exciting avenues for expansion in our focus on hydroelectric power generation and water infrastructure verticals. Lastly, let me now give you some updates on key litigations that our company was involved in and the progress that we have achieved in those litigations. As we had updated you in NTPC Tapon Vishnugad Hydroelectric Power Project, we had won an arbitration award which was challenged by NTPC in High Court. The amount was fully deposited by NTPC in the High Court under protest. We are happy to report that NTPC has paid us around 65% of the total claim amount, which is an amount of 46 crores under the Vivad Se Vishwas scheme in December 2023. Development in Bhilwara Jaipur Toll Road project was that arbitration award was already with us. The PWD had deposited 10% of the arbitration award amount before challenging the award. The appeal made by the PWD, Government of Rajasthan, has been dismissed by the commercial court, and hence the arbitration award has been reinstated. The PWD, Government of Rajasthan, has now option of appealing against the decision of the commercial court in the High Court of Rajasthan, and more specifically in the double bench, because of the current rules of the Arbitration Act. With respect to Mahada Bandra project in Mumbai, because of various reasons, we had the consortium had appealed to the arbitration forum against Mahada, and the matter was finally heard with an award partially in our favor, with FSI enhancements and a couple of other reliefs which were granted to us, and some reliefs which were not granted to us, subject to payment of additional applicable rates of the FSI, enhanced FSI. The operationalization of the award is subject to further legal proceedings by Mahada, and also we have ourselves appealed against the arbitration award, seeking some additional release from the legal process. Before I request our CFO, Mr. S.K. Jain, to delve into the details of our quarterly performance, I would like to reiterate that over the past few years, we have continued to build on our strengths and have increased the scale of operations of our company. With a large order book at our hand and our demonstrated track records and leading position in hydro and water infrastructure, we believe that we are well placed to capitalize on the opportunities in this space and post strong growth in coming quarters. I now request Mr. S.K. Jain to take us through the financial performance. Over to you, Mr. Jain.
Thank you, Vikasji. While the overall performance has been discussed, let me take you through some key highlights of this quarter. Execution momentum continued across both engineering and real estate segments, with revenue growth of 24% year-on-year to rupees 245 crore and 140% year-on-year to rupees 27 crore, respectively to quarter 3 2024. In Q3 24, unbilled revenue have been considered for those items whose billing will be done in 1 month after the end of quarter, unlike the previous policy. Higher other income on account of receipt of arbitration award under Vivad Se Vishwas scheme has been accounted for. As we have been highlighting, we have focused on utilizing our fresh cash flow to reduce debt. Our non-current liability have reduced from rupees 96 crore in March 21 to 62 crore in September 23. We will continue to carefully use our free cash flow to strengthen our balance sheet. Thank you very much. Over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Kaushal Kedia from Walford. Please go ahead.
Yeah. Hi. My question is for the CFO. Can you please explain as to why, what mismatch is there in the revenue booking and in the expensing out in this quarter?
Yeah. Unlike previous quarters, we used to bill unbilled revenue, the work which we completed suppose in quarter end, and the billing has not been done. So we used to bill as unbilled revenue as per banking guideline and as per our internal policies. But from the GST perspective, we cannot book the revenue if the billing is not done in 15 days or 30 days. In December quarter, we have booked only those revenue. So the billing of those will be booked certainly in 1 month. So those gaps have caused some revenue booking, lesser revenue booking.
How much is that amount?
25
we've done the work. How much is it?
25 crore approximately.
So, for my understanding, so this 25 crores is the work is done, and it's just the billing and that has to be done. The billing has to be raised and recognized as revenue.
Yeah, but the billing will not certainly be done in January. So we have not booked as unbilled revenue into that quarter. Okay,
but the work that we've done for this has come as expense, as I'm assuming changes in the finished goods.
Yes. Unbilled revenue we can book at the profit, and finished goods we have to bill only at cost.
No, can you repeat that, please?
Unbilled revenue we can book at profit also, which we have to bill to the government, and finished goods we have to bill only at stock, only at cost.
Only at cost. So basically, unbilled revenue is to the tune of 25 crores.
Unbilled revenue is 25 crores, which we have to bill to the government in January, but we were not certain it will be done in January, so we have not booked as unbilled revenue.
Okay, so we've not recognized it as revenue, but we've incurred expenses pertaining to that revenue.
Yes.
Okay, and so one more question. So in the notes to accounts, it says that we've sold some land for 16 crores. So that is showing where?
That land is in our SPV in Gujarat silo, where we have sold the land, and the amount is lying in that company only.
In that company?
In SPV only, yes.
Okay. And this in the same notes to accounts is 25.93 crores of advances that the company has given to the subsidiary that is showing as advances in the books of the company.
That is lying as of now to Gujarat and Bihar silo. Out of that 25 crore rupees, 16 crore has already been realized in those companies, which will be paid to main company in some time.
Okay. So the other income, which is of 19 crores, it pertains to the Vivad Se Vishwas scheme amount that we've received.
Yes. We have received some 40 odd crore rupees in Vivad Se Vishwas, and in this 40 crore rupees, some 19 odd crore rupees is towards interest income.
Towards interest income. Oh, okay. That is what I was wondering, that the Vivad Se Vishwas receipt will not be classified as other income. That is what my next question was.
Only interest income we have classified as other income. Main supply income has been classified in the main income, main turnover.
Okay. Thank you, sir.
Thank you. The next question is from the line of Jinesh Shah, an individual investor. Please go ahead.
Good evening, Vikas and team. My question is specifically related to the Palacia project. Can you please elaborate how many units we have sold in this quarter, and what are the balance unit which we are planning to sell further?
Jain Saab, can you take that question?
We have uploaded the presentation on Palacia project, and we have almost sold 60% of the units in up to December 23. And some 150 out of 150 units 3,49,000 has already been sold and 2,96,000 is remaining to be sold, which will set a revenue of almost 300 crore rupees. And against the sold units, we have already realized 313 crore rupees, and some amount is already is yet to be realized. Overall, in next 2 to 3 years, some 370 crore we can realize out of cash flow.
So why this realization is getting delayed? Because as I understand, the project is completed, the OC is received. If the units are sold and the agreement is done with the buyer, why the realization is getting delayed?
People are not getting their units registered in their name because of stamp duty, and there is no any law which can prohibit them कि आप stamp duty देके payment करो या booking वो करो, registry करो. So people are just waiting for that.
And what kind of total revenue we are expecting from Palacia by this year end, by this financial year end?
So roughly 35 to 40 crores.
Okay. The second question I have for Vikas. Vikas, we have been talking a lot about pump hydro projects and other, and in the last call also, the company was expecting to grab quite a few projects in this segment. Can you please elaborate how many projects we have bid so far and what are the expected order book in this line?
As of now, we already have 150 crore project going on in the pump storage project, which is the Kunda pump storage project in Tamil Nadu. This is our first project in pump storage pump storage project. Likewise, we are expecting, the government of India has drawn a potential of adding another 25,000 megawatts through pump storage projects. So certainly, it takes a little time for these projects to come up for bidding, but because first the DPR is made, DPR is approved, financial closure is done, CCA is for government sector, CCA clearances are done, all those things are once they tied up, then the bidding starts. So the bidding process itself is a little slow, but certainly since this is being driven by the PMO, therefore there will be no dearth of equity funding especially for the central and the state government projects, and certainly these projects will come up for bidding. My sense is that in the next 6 to 12 months, some of these projects will come up for bidding. Okay. And our share in that will be, of course, either limited to hydromechanical equipment, which will be roughly around 5% of the total cost of the project, or if we do civil and hydromechanical, then it will be much larger. But that will depend on project to project, how much we want to take and what part of the project we want to bid for.
Understood. You have explained about the Bandra, Mahada, where you are going to challenge the verdict. But this project of Bandra slum rehabilitation is pending since many years. And what I understand, based on the recent development, the Maharashtra government has already granted FSI, which is increased from 2.5 to 4. So is this 4 FSI applicable for our project? And what is the time duration you are thinking when this matter will be closed with Maharashtra government?
See, the project is a slum rehabilitation project, and therefore it's very complicated. It takes time. But the good thing that has happened is when we took over the project, the sellable FSI was close to about 500,000 square feet, and today we are talking about almost 3 million square feet. So the FSI has increased, but my sense is that unless the plot is cleared, the monetization of this may take longer than usual. So we have signed up the joint development agreement with DB Realty, and hopefully in the next 6 to 12 months, the plot should be cleared of slum, and once that happens, then the monetization of this project will also start. My sense is 6 to 12 months.
Okay. Thank you, Vikasji.
Thank you.
Thank you. The next question is from the line of Tejas Shah from Laser Securities. Please go ahead.
Hi. Regarding that Jaipur, how many units have been sold and how many units are pending?
Approximately 90 units have been sold.
90?
5. And 57 to 50 units are.
And out of 95, how many are booked or because I think last time what you said is that unless and until the place is registered, you are not booking that in the revenue.
Yeah.
So out
The
of
value,
95, how
the
many
value
are
of the
registered and how many are...
the value of the units is roughly 313 crores, and out of this we have only booked approximately 140 crore rupees.
Okay. So, if I see sequential revenue now, I think we were showing loss in this thing on the real estate. Why is that?
Because we have to entire expenses which is going on towards interior and towards value addition, that is going straight away into the profit and loss account. Earlier it was capitalized when the project was not complete. Now it's going straight into the profit and loss account. Suppose we are incurring 10 crore rupees and the registry of only 8 crore rupees is done, so 2 crore will be shown as loss. But this loss is just it's a book loss, not a real loss.
Okay, so if you can share or throw a light to what is the normal average realization profit that we are looking at? Means on the sale value 10%, 15%, means
15%.
what will be 15%? Okay.
490 crore rupees is total value of project approximately, and this will get us 600 crore rupees approximately. So net our 15% is profit.
Okay. And on the Infra project, what I understand, everything is cleared or still something, because I'm still a little doubting. And is the DB Realty is the now only joint venture, wherein I think DB Realty was supposed to construct the whole project and we were only going to enjoy the profits of the same. Am I right, or something has still changed?
So DB Realty is our only partner right now. They are the ones whom we had signed the joint development agreement with, and they were supposed to do all the slum clearing works, etc. Once the slum is cleared, we may jointly think of getting some third party on board, or we may monetize it on as is there is basis once the slum is cleared.
Okay. But any particular reason why do we still need a third party? Well, DB Realty is very capable, I think, in building things.
No, just it's still not finalized. The strategy is still not finalized on what we intend to do going forward. I mean, as of now, we are only focusing on clearing the slum and getting clean ownership on the land.
So right now it has been encroached by some people or some slums, which makes
right now there's slum over there. The slum needs to be rehabilitated.
Okay, and I think in between you had constructed some buildings also to rehabilitate. So is there still there, or you had planned to demolish it again and do something else?
No, we are renovating and upgrading it and also constructing additional buildings also. I mean, DB Realty is doing it. We are not doing it. But we are upgrading the already constructed facilities, and also we are at the same time also constructing additional space at the same location.
And the SRA or the MADA, everything is cleared or still some formalities are pending with them?
No, we own the rights to develop the property, but there are still some, that is why we went into arbitration. We asked for some reliefs and we asked for some obligations to be cleared by MADA, but MADA was not able to provide us those condition precedents, and because of which we went into arbitration, and then arbitrator has given us an award, but that award is still not covering all the reliefs that we had sought from the arbitrator in our appeal, and therefore we have appealed against the award also. So matter is sub judice as we speak today. We did get some relief. For example, the land that MADA was supposed to give us as per our original agreement was 26,000 square meters, 30,000 square meters. But what they gave us was only 26,000 square meters. So the arbitrator has given a judgment that no, you have to give them 30,000 square meters. So, things like this are what will need some intervention by MHADA and SRA. So that is if that is to answer your question.
How much time again this is going to take to again do that rejoin there and again reappeal and whatever?
My sense is next 6 to 12 months. And simultaneously, there are a lot of works which are happening simultaneously also, right? So on the ground, we are also constructing those temporary transit tenements. We are upgrading the existing tenements which are built there. So all those things are parallelly going on. While parallelly, this arbitration and this legal process is also going on simultaneously.
What is the ballpark revenue that we can generate approximately from the...
See, revenue will all depend on what we intend to do once the plots are cleared. If the plots are cleared of all the slum and it becomes a clean piece of land, then we may decide to either develop it. The DB may decide to either develop it themselves, or DB may decide to sell it outright, or DB may decide to bring in a partner which brings in a brand at that stage. But that discussion doesn't make any sense to do now. That discussion makes sense to do only once the plot is cleared.
Basically, we still have to wait for a year at least, I think, looking at all the conditions.
Correct.
Okay, thank you.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hi. Thank you so much for taking my question. Hope I'm audible, sir.
Sir, you are audible. You may proceed.
Yeah. Hi. So just wanted to ask, I'm sorry I joined the call a bit late. Maybe my questions are repetitive. So we had a spike in other expenses this time, right? So could you just, why have our margins dropped a bit? Like, could you just explain, because we had significantly different margins in Q2 and Q3?
Yeah, the work which has been completed, and again, the billing has not been done. That is showing as an expenses in the books of account.
And the billing will be done for when?
Due to elections in Rajasthan, the billing was not done. So billing will be done probably in March or April. Due to elections, 2-3 months we could not do any billing because the Achar Sanhita was there. There was no payment from those two projects.
Okay, sir. So also we want to know, sir, any kind of guidance would you give for, FY25 revenue and margins? What can we expect? Any projects that are coming to fruition, which will, increase our revenue somehow? Yeah,
March 25, we are hopefully targeting, if everything goes good, 1,200 crore rupees as a revenue, and 10% as 8 to 10% as net profit.
Oh, net profit, sir. Okay, sir. That's great to hear, sir. As well as, sir, just wanted to ask, like, in terms of our order book and execution, like, just from understanding the company, as some projects, will take 3 to 4 years. So, most of the projects, like, if you would see our life cycle of the project in Jal Jeevan and Hydro, they would be at the starting, middle, or towards the end of the life, in case, majority of the projects.
We have right now projects in all the stages. Some are at early stage, some are at middle stage, some are at late stage. Like Manipur is at the early stage, and Shapur Khandi and Isarda is at middle stage, and Jal Jeevan is also at middle stage.
Okay. Yeah.
Majority, 95% of our order book, rather only 40-50 crores out of 2,500 crores is in early stage. Otherwise, everything else is in middle stage.
Oh, okay. So I just wanted to ask this question because maybe in the next 1 or 2 years we could see accelerated revenue as well as higher profits because a lot of expenses would have been already booked. Would that be a fair assumption, sir?
Yeah, that's correct. Yes.
Yeah.
Okay. Perfect, sir. And I just wanted to ask, like, with the election, does that, hamper our business somehow, orders or cash that is released from the government?
Yeah, definitely election does have an impact, because what happens is a lot of new tendering and new projects get frozen because of elections, both state as well as central government elections.